right, hi everybody. Welcome back to another video with Andrew. We are actually going to record two videos today. One that is focused on 2024, sort of a year recap, what happened in the market, what did we learn, what did Andrew learn from, well, his investing activities in 2024. And then the other part, which will be released, I guess, 1 or 2 weeks later, will be more focused on what's ahead, 2025, some of our bold predictions and what we are expecting, yeah, from the world of stocks in 2025. So, Andrew, first of all, welcome back to the channel.
Yeah, thanks for having me back on. Excited to be able to chat stocks today. It's been a while.
Awesome. I thought maybe to start, now that we look back on 2024, I should provide some numbers. So I prepared a couple of charts here, and I guess most importantly, what you can see on screen right now is the performance of the S&P 500 in 2024. And I have to say that it was another pretty good year, certainly above average year with a price return of 23.35%. And I think what's also worth highlighting here is that this good year followed a year in 2023, which was also quite solid. Like I don't remember the exact return, but I think it was also in the 20% range and might have even been in the high 20% range. So I think having two 20% years in a row is something you don't see all too often in the world of stocks. What you can see here is actually the distribution of annual returns of the S&P going all the way back to 1928. And as you can already guess, well, it's been two above average years. So I guess we'll get to discuss a little later what this means for future expected returns. Have you been enjoying the 2 years, Andrew? Have you enjoyed because I know you have
Yeah,
great years in your portfolio too.
yeah, it certainly makes you feel smart. That's for sure.
Yeah.
Although I mean, it's last year, towards the latter half of last year, I mean, it does feel like certain opportunities amongst kind of the filters that I like to look for anyway are kind of drying up. So that doesn't mean the market's topping or anything. It just means that there's a lot more sitting around than I suppose I've been used to over the past 2 years, but that's fine.
Yeah. So I'm not sure how much time you actually had to look at the slides I prepared before joining the call. If not, let me just walk you through what this bar chart here shows. And I think that's the takeaway from it is also super interesting. So I just said that we had two, yeah, I'm tempted to say two blockbuster years in a row in the US. However, only very few stocks actually outperformed the market. So basically, you can see the percentage of S&P 500 members that actually beat the market in that given year. And in 2023 and 2024, we are looking at pretty much record low numbers, at least over the last 30 years or so, with only 28% of all S&P members actually beating the market in 2024, and even less, 27% in 2023, which of course can be attributed to the fact that the major drivers of the overall S&P performance were the big tech names. This is actually shown in this chart here, where you see the contribution of the different, well, I guess, yeah, it's the Magnificent Seven, isn't it? To the overall index performance. And NVIDIA, of course, has been the major contributor. What do you make of this chart here, Andrew? Does it?
Yeah, so I briefly glanced at the slides beforehand, but I actually didn't look too far into this. I saw a lot of numbers and I just kind of glanced over this one. So
Yeah.
what's interesting, and this is pretty well known, pretty well studied, but and I'm not calling a market top, I'm not a market timer or anything, but what I will say is there are a lot of indications that are very reminiscent. So 98, 99 time period is really the only time we've had kind of this concentration in the market, and actually, if you look, I can't remember the exact years, but the crash prior to the 90s, was it the 70s probably.
Mhm.
You also had similar market concentration as well. So this is something that's been studied before. Why does it happen this way? I'm not exactly sure. Probably has something to do with groupthink. But yeah, this is a indication that the market typically is on its last hurrah before a market correction. Once again, it's not a call, it's just a historical indication.
Yeah.
So that would just kind of be something to be aware of. At the same time, though, I will say, these companies are performing very well. That's also something else to consider, right? We are seeing obviously multiple expansion. So on a apples to apples comparison, the stocks are getting ahead of themselves if they were already fairly valued. Now, one could make the argument maybe they were undervalued and they're just kind of correcting an overreaction from the past. I'm not sure, but these are just kind of things to keep in mind.
Yeah. What I just noticed now is if we go back to the 98, 99 period, for example, so the 2 other years during which, well, around 30%, only around 30% of all S&P members outperformed the index. The subsequent years have been great for the majority of S&P members. So I guess, and now that gets highly speculative, I guess, but I guess one takeaway for someone who is actively picking stocks is that your chances of actually picking an outperforming stock over the next few years might be higher now, just because, and again, that's the speculative part of what I'm just saying, but maybe some of the major components of the S&P will perform worse, dragging the performance of the overall index down, leading to greater chances of actually beating the market. But then on the other hand, as you just said, many of the big names are also performing tremendously well. And I don't think many of the names, with maybe the exception of Tesla, are really egregiously valued. If you think of Nvidia, for example, like I've been wrong on this name. I think I published a video on video a year ago, a year or so ago, highlighting that I think this stock is stupid expensive, but then Nvidia continued to grow in the triple digit range, justifying the valuation back then. So I really have a hard time predicting where Nvidia might go. I think even Nvidia's multiple might well be justified. It's hard to predict.
Yeah, and Nvidia is a tough one. It's not that it can't like just because we point out the fact that it feels like it's overvalued. Obviously, it doesn't mean like we're calling to short the company or anything like that. It's just historically that I'm sure you can pick and pull a specific example from history, but historically, on average, by and large, that a company of that size
Mhm.
relative to that price to sales ratio. I'm not even talking about price to earnings because maybe they're under earning, over earning, whatever. But like on a price to sales basis, historically, it just not has worked out to buy a company at that ratio. Now, of course, maybe this is a phenomenon unlike anything we've ever seen before. Once again, I'm not here to say whether it is or it is not. Just to make that bet is a tough bet to make. Now, of course, if you make that bet and you're right, yeah, it could pay off. It's just obviously a bet that you and I would not be willing to take. But as Warren Buffett and them say, we don't have to swing at every single pitch. So if we don't feel comfortable buying it, we don't have to. Um,
Yeah.
but it's something different, like for example, like a Palantir or something. I think is probably in a little bit of a different camp. But I don't mean to stir up your audience, so I won't go down that rabbit hole.
But I fully agree with you. And even in terms of Nvidia, what I will say is I was listening to the Robert Vinal annual gathering the other day, and they were asked about quote unquote missing Nvidia too, and what they had highlighted, and I can strongly resonate with that sentiment, is that it doesn't really bother them because it's just not in their circle of competence, and I
Yeah,
think so it is not in either of our circle of competences, and it can continue to go up and beat the market, and it won't bother me not owning the stock just because I know I can't know. And Robert Vinal's partner Andreas, he even points out that he brings up a few structural points that I made in my video back then too. I think that I feel like the margins of Nvidia will eventually come down. They are ahead technology-wise of competition, but generally speaking, the setup of having a limited number of clients should reduce your pricing power, and it gets worse. Like if you take a long term into account that the clients themselves act actually very actively trying to build their own chips, so they no longer have to spend billions and billions on Nvidia's product. So broadly speaking, I feel like that setup is not
yeah.
something that should excite you as an investor.
Yeah, I'm not sure how those industry dynamics play. It's just so far out of my. There's so many more experts on that industry than I am, so it's just easier just to not even play. But what I will say too, like to your audience, is one of my best calls, which regrettably I didn't hold the entire time, but you and I have talked about this. My best call over the past 5 years. Um, I think like on a percentage basis, my no-brainer call was it's a grocery store, right? Sprouts Farmers
Mhm.
Market like 5 years ago, trading at I think you could have bought it at a low of 7 to 8 times earnings. And that's been like the greatest return that for an obvious call that I've had anyway. And I mean, I haven't done a side by side comparison on Nvidia and Sprouts Farmers Market, but I mean, the returns are probably similar over that time period, right? One's a super, flashy industry kind of next revolution, and the other's just a grocery store. And I mean, you can do very well in both. You don't have to look smart and investing to be smart, I guess is what I'm trying to say.
Yeah. Yeah. Right. Next up, I wanted to ask you, Andrew, what you think the key theme was in 2024. And you can already see what I think it is.
Oh, yeah,
You
obviously.
probably don't disagree with me here. It's
No,
very likely
obviously.
AI, right?
Yeah, that's it, everyone and their mother decided to start dropping AI in their investor presentations or whatever. I mean, you had golf companies mentioning AI, you had the
Mhm.
grocery stores mentioning AI. If anyone could talk about AI, they did. So yeah, no, I don't think anyone could argue that. I'd also say cryptocurrencies as well, and
Mhm.
not to get political,
Yeah.
I won't get political, but also having a new president, right? Having Trump
Mhm.
back in office,
And what it means for various industries.
for what it means for these industries and what it means for certain companies and the markets as a whole. Yeah.
Yeah. And I would say the same is true for AI. So it doesn't feel like it's some kind of Ponzi scheme. No, AI will have a material impact on many businesses. And I actually think that therein may lie an opportunity if you just correctly assess whether a company will be a beneficiary or maybe a loser due to AI developments. What's your take on Google, for example? I feel like with regard to
Yeah.
the AI theme, Google has probably been one of the most discussed businesses in terms of what it will do to their business.
Yeah, I struggle with AI, and I know you and I have talked about this. I can see both points of views for Google. Like I can see where it's an overreaction, but at the same
Let
time,
me just
I
say,
I, I
Andrew, that
can see where.
I do
Yeah.
remember that I think you thought about adding to Google in 2024, if I'm not mistaken, at some point.
Yeah, I thought about it, and you know what's ironic is at the time, I don't remember if it came out at this time or if I just happened to watch it as the Google kind of AI thing was going on. Was the show on, I want to say HBO or Hulu, but it's called Blackberry, and it's essentially how Apple years ago ended up taking over Blackberry, and just because Blackberry was kind of they were the game in town, but they ended up getting caught on their heels, missing out on kind of the next revolution of technology. I'm not saying that is happening with Google. All I'm saying is as I watched that, I kept thinking of Apple the entire. I kept thinking of Google the entire time, and I think
Mhm.
honestly it scared me away. Um, Obviously, in hindsight, a bit of a mistake. I would have made a decent amount of money, but yeah. But it's whatever. Um, but yeah, I don't really have a strong opinion either way. I would think today. I will say this: if I could get Google back at the valuations that I typically like to buy companies at, I think I would pull the trigger on Google. One that I'm a little bit more fearful of,
So now we're
and
talking about like 15 times free cash flow or 15 times earnings
yeah, on a
basis.
forward basis too, like
Mhm.
18 times current, 15 times forward. That's fine by me. And then I know one that you and I disagree on, and it'd be interesting to hear from your viewers. Would be like Adobe, right? I'm a little bit more fearful of Adobe with how AI works out, and I know you think of it as a benefit. It sounds like so. Um, but once again, if I
Yeah.
don't have a hard, concrete opinion either way, typically I just kind of stay away.
Yeah. Yeah, I think Adobe might be a good example for what I was describing earlier, where the AI risk may present an opportunity. Quite frankly, I don't have a strong opinion on whether Adobe will be a beneficiary or a loser due to these developments. I would have to do some more work. It's not that clear to me, however, that I think in your view, chances are Adobe might not be a beneficiary. However, I do see a world where the lock-in effect of Adobe is just too strong, and that AI will just make their products better, improve the productivity of Adobe product users. So it's not like I know the stock. I think the stock is down to around also a 20 times multiple, if I'm not mistaken.
Yeah, it's
Um,
getting cheaper. Yeah, I've certainly looked into it. But
yeah,
I keep struggling with that, not having a strong enough opinion either way to really feel too confident
yeah,
in making an
and and
investment.
and, and I want to say that I think the trajectory of Adobe is for me too so unclear that even that multiple, which doesn't seem all too pricey for a company with these margins, excites me. So it's not like I
Yeah,
looked at Adobe closer now. I think there are other candidates where I feel like I first of all a stronger opinion, but also a better judgment in terms of what AI will do to that
yeah,
individual business. So chances are we'll not take a closer look at Adobe anytime soon, but who knows? If the price
yeah,
continues to come down, we might have to revisit the idea.
yeah. I agree.
All right. Next up, I wanted to ask you what you think the most surprising market event was in 2024. And let me just start maybe answering that question myself. So to me, it is, and I sort of addressed this already in today's session, that the market continued to do so well in 2024. So when we get to our outlook for 2025, we will probably highlight the valuation of US stocks again. And you could have probably made a very similar case back in 2023. You ended the year with a very solid, above historical average performance. And what this chart here shows it's a chart I included in some of my other videos already, is the what is it called, price target of various financial institutions for the S&P for 2024. And as you can see, I think we ended the year slightly below 6,000 points, but we ended the year way above any of the analysts' price targets. So the fact that we had such a great year after the already great 2023, that's the biggest surprise to me.
Yeah. That's not too surprising to me, I will say, because coming in, so all most of those price targets, I think if you do the math on it, ended up being like they were estimating roughly a 10% return for the market.
Probably.
Um, I mean that is the most all they do once again because they all have jobs to protect. That's all they really care about. They say, hey, if I make a bet on the historical average of the stock market as the returns for next year, I'll probably there's a chance I'll be somewhat accurate, and even if I'm wrong, hey, at least everyone else was guessing the same thing. So like there's that herd
Mhm.
mentality. And now that we've had really good returns for 2 years in a row, you see all these estimates for really high returns this year. I mean, it's nothing that really surprised me.
Yeah.
What I will say is the thing that surprised me the most is I guess not surprised me, but and I wrote about that in the letter was just like the companies in my portfolio, by and large they performed very well, but um, the multiples or the valuations also performed very well, right? Like I kind of had a dual boost, both from multiple expansion and from the growth in the businesses. And it's not that like I don't
Yeah.
expect that to happen with my companies. I think they extended their multiples more than I probably would have expected them to, but maybe justifiably so. But I think that was the biggest kind of surprise for me. Um,
Mhm.
yeah, I wasn't really too surprised about too much in the market this year that I can think about. Nothing that like took me way out of surprise.
Yeah, yeah. You just referred to your letter, and just to clarify, every year. I'm not sure when you started with it, 2 or 3 years ago. I think you
Yeah.
sit down and you try to reflect on your key learnings from the year. So let me just ask you, what were your key learnings? Some wins or losses you want to share here? Anything you maybe there's sort of a lesson that some of the viewers can benefit from that you can share here.
Yeah, I think the main thing I would say would be being paid. I mean, it's probably reinforced every year, but it's just having patience, letting your really good companies just kind of continue to do their thing. Don't interrupt the compounding, right? Because I could have interrupted the compounding on, for example, two of the companies, right? Meta and Interactive Brokers both performed very well this year, but I felt like the multiples kind of got ahead of what I was expecting. But
Mhm.
at the same time, now that I reassess, yeah, are they probably on the upper end of their valuation range? Certainly. But could I also see them doubling their earnings over the next 5 years? And could those multiples be justified today? Yeah, certainly. So when you have kind of these really good high conviction companies that are growing well, earning high returns, it doesn't really make sense to sell them. You're getting in the way of that momentum, right? And then on the other hand, these kind of valuation turnaround plays sometimes can take a lot longer than you would originally anticipate. So one of my larger investments is the Boston Beer Company, as you know, that still hasn't turned around from a business or a valuation point of view. And then also Interactive Brokers, right? That's one that you and I both held. Interactive Brokers is kind of just not turning around as quickly as I would have expected it, right? So yeah, just having patience and letting your winners ride, I guess, is kind of my biggest takeaway. But it's nothing that I didn't know. It just kind of reinforces it every
Mhm.
single year. What about you? What's some lessons you took away this year?
Yeah, if I may just add one comment to what you just said. So I would even argue that companies that are compounding internally, and now we're speaking about obviously compounded earnings power at a high rate, are I would argue that they are less risky than what you just referred to as valuation plays, because the valuation plays, and I think that's what you have in mind here, are usually companies that aren't necessarily growing their earnings at a high clip, that are, however, trading at a very low multiple. And so you're betting on that multiple getting re-rated by the market and that being a boost to the overall performance. And if that doesn't materialize, well, then you end up with subpar performance, I guess. And that
Yeah.
risk isn't present in those quote unquote compounder stocks. I know that term is sometimes maybe overused, but it describes the internal dynamic of these businesses quite well, I think.
Yeah, you're certainly not wrong. Yeah, most of the businesses I buy are IAC is the one very peculiar company for what you and I typically buy. But yeah, I mean typically even these valuation plays, they're growing businesses. They're just not growing as fast as kind of my higher conviction compounders. But yeah, you are right. If you're buying them when earnings are shaky, assuming that the earnings are going to turn around and as such so will the multiple, and sometimes these companies, instead of taking only 2 or 3 quarters to turn around, sometimes it takes them 2 or 3 years, and that's kind of what I'm referring to. And you're right, and maybe after 2 or 3 years the business inherently changes over 2 or 3 years, and maybe it's just never ends up being as good of a never getting back to being as good of a business as you expected it to. Therefore you never get that re-rating, and yeah, you definitely earn subpar returns at that point. So yeah, one could argue that it is riskier doing that. Certainly.
I was meant to ask you, and I might just as well ask you now that we are recording the session. I saw that the Boston Beer Company is down a little more, I think, and you were already tempted to increase your position, I think, at a higher price, if I'm not mistaken. What's your view on the opportunity here or there? Is it already itching that you want to
So
deploy capital
yeah.
there?
So ironically, luckily I've been busy at work, so I actually by the time I can look at the markets, it's already the market's been closed. I guess that's kind of a good thing, right?
Yeah.
It doesn't cause that knee jerk reaction. But yeah, by the time I've actually been able to get time to put in the buy order for Boston Beer, they're already back to those multi-year lows again. They're kind of sitting at that support level. So yes, I I did increase my position if anyone was curious. But
Oh, you
what's
did? Oh,
also
interesting.
yeah, but what's also important to note, and you and I have talked about this, I go overboard with my position sizes, and I've already done this with Boston Bear as well. So even though yes, on paper I'm holding the same position, and it's technically roughly slightly down to flat, I have been increasing and then trimming on these shoot ups, and then when it gets back down, I buy again. Like I don't offload my entire position. I might offload 25% of my position. So I mean, like on par, I did make money on paper. Well, actually, I did realize gains on Boston Beer last year. But yeah, the actual meat and potatoes of my position, the other 75% of it, yeah, that has not turned around yet.
Yeah. I don't want to make this a video on alcohol stocks in general. I know we recorded an entire 1 hour
Yeah.
video focused on that particular topic. But let me just say that I saw a chart on X the other day which showed the alcohol consumption of the youngest generation that is allowed to drink alcohol, or whatever that is. Is it Gen Z? I don't even know. It might have been a younger generation. But and I don't even remember how it was measured, but it really dropped. So I think it was a bar chart, and for the youngest generation, it really was tremendously lower compared to previous generations.
Mm-hmm.
So and the drop was more significant, much more significant than I anticipated. So that would be something to track for sure as someone invested in the
Yep.
alcohol sector.
Yeah. So I'll quickly touch on that just because I want to
Yeah.
answer. I have
Yeah.
given that a lot of thought. What I will say is, when one door closes, another one opens, and a lot of these companies are. It's not that these generations aren't drinking the alcohol companies' products. It's just that they're wanting to stay away from alcohol itself. So most of these companies are actually coming out with non-alcoholic versions
Mhm.
of their drinks already, and they're actually selling like hotcakes. So I mean, yeah, there's going to be a value to gather there at some point. The really interesting thing, not to get kind of too off topic from the core of this video, but is beverages as a whole, which is very weird, which is very peculiar to me. Beverages as a whole are seeing a really tough time right now. So both coffee, caffeine drinks, sodas, right? Pepsi, Coca-Cola, um, uh, alcohol, right? Like these kind of core categories, typically you would see one fall off and one gain up, like having that value capture. I don't know where, like, are people just drinking water? I don't know where that value is going, but the past 2 years have been very bad for just beverages as a whole, with the exception of coconut water. But they're not capturing all that value. I can tell you right now by the numbers. So I'm really not sure where all that value is going, which is weird because humans typically on par drink, they consume an average amount of fluid ounces a day. It's just where they're consuming those fluid ounces. I just don't know where it's going to. So, yeah.
Maybe it has something to do with increased health consciousness.
Yeah.
People just drinking more water. I don't know. I'm
Yeah,
speculating.
I have no idea where it's going. I'm trying to find the companies, like the public companies that's kind of having that value capture, and I'm not really finding it, um, which is very bizarre, I will
Yeah.
say. But
Yeah. That already brings us to the end of this first, but anything you want to add with regard to 2024 and Rewind?
no, you and I will have to see who had higher. My performance, so I'm curious to see who had a higher performance in the
Yeah.
year. Maybe we'll have to start a challenge. Maybe I don't know. Maybe a 0.5% of our portfolio, whoever wins every year, has to the other person has to buy a
I
suggested
think that's
company.
a bad incentive to have as,
I
as an
know. I'm
investor. I
kidding.
think this will be to the detriment of both of our
No, I
performances.
know. I'm just messing with you.
All right, let's call it a day for part one, and we'll come back for part two in a
All right.
second.
Sounds good.